Wondering if profitability is possible. You failed multiple prop firms. Some of you have been able to go through the phase 1, phase 2, even get a payout, but then just lost the account back. And the thing I often tell people is that trading is simple but not easy. Now, when I mean trading is simple but not easy, I mean trading is simple because what it takes for you to become profitable is straightforward principles, direct principles. And why it's not easy, because it's difficult to bring that human psychology to match with how trading psychology should be. So trading psychology generally is counterintuitive, meaning it's opposite from how normal people think. So that's why it's really difficult to master trading and become profitable. You have to think like a big businessman to be able to be profitable in trading. So I'm going to tell you 7 things I did that got me profitable really fast, faster than most people. So I started trading in 2020 and my first 2 years was like whack, because I was doing a lot of mistakes and I was not doing these things I learned along the line. So these are the things that I learned, and when I knew about them, things got easier for me, and I started having payouts from prop firms and withdrawals back to back. So number one thing I did, I stopped trying to struggle alone. Now, this is common amongst most traders. They want to read baby peeps and then go straight to YouTube to start learning from diverse creators online. In trading, you need a guide, you need a mentor, you need somebody that you can ask questions. You need somebody that put in the work, have a working system, a system that works, a system that have been proven. You want to adapt the system from him, and you want to be able to work on that system to suit you. You want to make sure all your studying and practicing is based on what you have been taught. Now, this makes the journey way easier for you, because you're supposed to be researching what system suits you from diverse mentors. You're supposed to be testing out different concepts. You're supposed to be having long backtest data. But when you learn and adopt what somebody has taught you and master it, it gets easier, because you're going to be building on one concept, and every question you need to ask, you'll be able to ask this mentor. Anything you want to find out, anything you want to know, you ask this mentor. It makes your journey smoother, and you avoid unnecessary losses. And people are like, well, I don't have the money to pay for mentorship. Literally, when I started, I did not have the money, but trust me, I still paid that same money and even debts for not learning properly. Because in as much as you will fund your account, as long as you will put your money in trading, then definitely you're going to pay for it. You're going to pay all that money you're supposed to use to learn properly. You're going to pay to the market. So not having money is not an excuse to learn how to trade. It's not an excuse, because you definitely fund account. So if you're in that category of not having money, save up, budget it, and get somebody to show you the way. I stopped searching for the holy grail. So there's another thing to get a mentor, and there's another thing to start searching for strategies everywhere on YouTube. If you have a mentor, stick to him. Okay, there is no holy grail in trading. When I realized that there was nothing that would stop me from losing, and I'll just be winning, something that will just make me only profits will not, that's simple and will make me profit, that I can always use. In as much as that doesn't exist, you will never ever find it. So you have to work with what you've been taught, master it, and accept probability. Number 3, I learned the principles of technical analysis. Now, this is the same thing across all strategies. I don't care if you do support and resistance, trend line, ICT, SMC, Elliott wave, Wyckoff, or you use indicators. Every system has these 3 components: what shows you the direction of the market, and the particular area of value you're going to trade from, and a confirmation that makes you trust that particular area you're trading from. So direction is in the sense that every professional trader has what shows them that, okay, the market is going to go up today, or the market is going to come down today. Every professional trader has that high value area they work with. Some work with support and resistance, some supply and demand, some FVGs, some liquidity pools, there is that high value area. And then, because there are many high value areas on the chart, your entry model, your entry confirmation is what makes you spot if this particular area you're trading for, in that direction you're already anticipating, if that area is strong enough to make price move, if it's going to hold, is it support, resistance, whatever. Some traders use their entry confirmation as candlestick patterns, tweezers, pin bar, engulfing, evening star, morning star. Why some of them use market structure shift, different kind of things, turtle soup as entry confirmation. So I learned this dynamics and I worked on these three arms of technical analysis. I made sure I was A1 100% in getting my direction right. I made sure I was 100% in getting the best POI to trade from. I also made sure I knew and mastered a particular entry criteria that would make me enter flawlessly. I learned journaling and accountability. So what happens to most traders is that they take multiple trades, they test different strategies with live money, is that quest to make money and not being accountable for what you're doing. Now, I learned how to journal and I've been using digital journal, Notion. You can watch this video right here to learn how to journal. It's on the channel right here. How to use Notion, okay? So Notion helped me because I was able to organize my trade, I was able to write my do's and don'ts, I was able to record my trade screenshots, everything. I was able to track my emotions, how I felt before I entered the trade, what triggered the bad psychology, what was the outcome of such psychology, how was the trading result for the week, trading result for the month. Every single detail I do record it. So what this helped me do was I was so accountable. So in reality, I don't want to take stupid trades that I'll be too ashamed of journaling. I don't want to take trades that if I journaled it, I'll be like, damn, I broke my rules. I don't want to break my rules or take stupid trades that when I'm journaling I feel ashamed. So in reality, I want to be very disciplined and take the right trades. And when I journal it, I don't journal nonsense. Okay, so journaling made me more accountable and it made me take lesser and more trades that I can explain, trades that have reasons I backed them up. Number 5, I accepted probability in trading. So there was a time in my life when I felt like I had to be winning, and that was the same time I was struggling with finding the best strategy. Now in trading, there is nothing like that. You can't win. There's losing streak and there is winning streak, and there are win losses. These are things you have to accept. So meaning, even if you're correct on your strategy, even if you're doing everything right, you will still have losing streaks. And that's the more reason you should stop trying to over refine your strategy, find a concept to suit when the market is going this left, going right. You need a stable, straightforward system backtested that works more times. So you shouldn't be in the business of making your win rate get to 80 over 100. If your win rate is 40, 50 with a good RR, you're good to go. You are good to go. So it's always important for you to have a good RR and understand that losing is normal. Losing 3 times in a row, 4 times in a row, 5 times in a row is normal. Okay? What happens is if it gets too much, like maybe you start having 15, 12 losses, you can analyze those losses and see what's common among them. From both your emotions to your entries, to your getting of your direction, to getting of your POI, everything. If you see anything common amongst them, then you have something to work on. This is when it calls for action. So what are you working on? You want to backtest this concept. You want to read a psychology book. You want to work on it. That's the reason why you should. And how are you evaluating it? You're evaluating via the losses, okay? Not just because you're in a losing streak, then you start backtesting blindly. You just run into more psychological trauma, okay? So do what's right. The 6th one, I traded lesser. Now, trading is not like every other thing in real life. Meaning, everything other thing in real life, the more you read, the smarter you become. The more you work, the more results you get. In trading, the work you have to put in is when you're learning and when you're trying to master the strategy, the backtesting, the journaling, everything. What you do at non-trading hours. But when you become profitable, you would not be needing any of those too much. You always review your journal at the end of the day, at the end of the week. Write notes, write lessons, just reviewing of your trades. Most of the times you can backtest. Most times it's just because you spotted something in a losing streak and you want to test, but once in a while. And when you're trading, during trading hours, you want to just come. Trading is very boring when you know what you're doing. You want to just come, look for your setup, place your order and leave. And you want to do it at very specific time of the day. Example, New York Q zone, 12 p.m. Nigerian time to 4 p.m. That's it. I trade just 4 hours. So that 4 hours prevents you from doing stupid shit. That 4 hours prevents you from over trading. So you just have that 4 hours and 2 trades per day. So with this, you get way more discipline because you just have 4 pairs, 4 hours a day, 2 trades per day. If I don't have a trade, fine. If I have a trade, fine. So that lesser trading really helped me. And I was trying to, make my trading in a way whereby I can be able to place multiple trades. When I was, refining my strategy, I was doing it in a way I can see opportunities every time, but that's not it. If your trading is the way you see opportunities every time, you cannot make it. The best of best traders trade lesser, so you have to make sure your trades are lesser. So you have to create confirmations in your trading that makes you confirm something properly before you enter, so that you don't get fake outs. That's how you trade lesser. Number 7, I learned the logic behind correct risk management for prop firms. So if you're trading a prop firm, listen to me. If you're on a challenge, listen to me. When you want to get that challenge, you must make sure you have 2 times the money in your bank account. 2 times the money that you want to use to purchase a challenge, so that you can be more calm. Okay, let's say if the challenge is $50, you want to have $100 left in your account after withdrawing that $50. Yes, so you can be more calm. And secondly, you should risk 1% per trade on your challenge account, not 0.5, not 0.25, 1%. Period. Why? Now, if you risk 1%, what happens is, if you get so deep in profit, more like 4% or so, or so you can risk 2% to pass it fast. You don't spend much time in challenges. You want to risk well in challenge. If it goes, it goes. Now, if you lose the challenge, it has nothing to do with if you can trade or not in most cases. Though bad traders will lose a challenge, they're fine. But even professional traders lose challenges and they win more. But they always have the money to buy challenges back to back. That's just the truth. Professional traders are always ready to buy challenges back to back. So if they lose this one, they're buying just another one, because they know that, okay, they have a losing streak, this one, that one, okay, therefore I'm going to buy this challenge. This one is failed, they'll just buy a new one and keep on risking the same way. When they get funded, that's when they reduce their risk and become way more conservative. They might have like 5 different prop accounts, and some of these prop accounts, they just trade one pair on it. Some of these prop accounts, they just trade once a week on it, just to make sure they are very conservative and they risk 0.5% when you are funded. But when you are not funded, you're in the challenge phase, there's nothing to be conservative about. Risk 1%. If it goes, it goes off. If it works, it works. So these are what I learned, and as you can see, every of these things have made me become profitable, and I keep posting my insights on trading on this channel. Watch them, improve your trading. I'll see you in the next video. The mentorship is open. Check in the description everything you need to know about how I trade. Everything I know in trading, you can learn it and apply it and master it. The community is there. Zooms twice every week, and 247 guidance from me in your journey. See you guys in the next video. Join the free public Telegram for free trade ideas and signals. See you all.